Generally speaking, conditions have improved for hedge funds, both because I think there's more emphasis on fundamentals rather than just trying to guess what is going to be the outcome of binary events such as elections.
Hello Nigel, and thank you for joining Dukascopy TV today. It's a pleasure to have you in our studio.
Thank you.
Let's dive straight in, asking why have you reinvested into the European banking sector?
The starting point really was that we thought that bond yields were far too low and that they should gradually rise. And when you have bond yields, especially longer term bond yields that would rise, you have a steeper yield curve, and that really improves the outlook for profitability of the banking sector. So that was the starting point, and in fact over the last couple of weeks that has really taken place with yields moving much higher. Also, generally speaking, the European economy is doing well, so it's a favourable background for the banking sector, especially when credit growth is on the upside. And we just tend to think that maybe analysts are a little bit too cautious in terms of expectations for profits. Also, I think another favourable point is really the fact that we're having a clean-up of the banks that really be under pressure because of non-performing loans. So recently we've had Santander buying out Popular in Spain, and also the Italian banks, both the banks in Venice and Montepaschi. So that is also a positive factor for this sector. So.
Okay, so moving on, what are the advantages of a maturity-dated high-yield bond fund?
Well, first of all, we still like fundamentals of high yield, especially in Europe. Low default rate expectations, strong balance sheets, and high levels of interest coverage. So that's the starting point. The reason we like maturity dated is because we know exactly what is the longest maturity possible in the fund. So as time moves along, your duration risk decreases. And also your credit risk tends to decrease because you're getting closer to maturity and you have less volatility on the positions. Also, the other favourable fact is that there's probably a more buy and hold approach. So there's less turnover, less transaction cost in the fund, and that also is something that we think is a positive for the asset class. And then finally, also the volatility tends to be a bit lower than traditional high yield.
Mm-hmm. And finally, why did you decide to maintain an overweight allocation into hedge funds?
I'd say there's three reasons really. One is, first of all, the difficulty to find attractive fixed income exposures, investment grade in particular, and sovereign debt. So automatically we are very underweight into that. Also because we are looking for diversification of the portfolios. If you see recently what happened, you have bonds and equities tend to be pretty closely correlated. So bonds dropping, equity dropping. So you need something that maybe can behave in a different way. So you know, strategies like global macro or volatility trading tend to behave differently than these assets. And also because generally speaking, conditions have improved for hedge funds. Both because I think there's more emphasis on fundamentals rather than just trying to guess what is going to be the outcome of binary events such as elections. And also because, for example, like a strategy like a long short, there's more dispersion within the different equities in the same sector. So that is, of course, a much better opportunity for managers to try and make money.
Nigel, thank you very much. A pleasure, as always.
Thank you very much.
And thank you for watching. And if you like this interview and would like to find out more, be sure to head over to dukascopy.tv.